Welcome to another episode of the Raad Life. The gentleman that you see in front of me here is no stranger to this show. He's been on before. We were in slightly different settings. Now he's at an undisclosed location because he's so much sought after, and as it is. He's smiling, but he knows it's true. So I'd like to really bring on this guy here, Logan Mohtashami, that I actually, he allows me to actually live vicariously through him. Since before interior design, I actually have a degree in economics, so he actually allows me to live vicariously through his little postings and his predictions. And I find it really comforting because he is very much, and he'll tell you yourself, and you can shake your head if you agree with me, Logan, but you are a data guy. You are a data guy. I mean, it's like the data doesn't lie. This is the data. It's, and in many cases, you have found yourself, and I've seen this over the last couple of years, especially. You've been a person that has said things that people probably didn't want to hear, didn't agree with, but you held true to what you're saying. And I think in your own way, you sensed this. What's going on right now is how we're dealing with this crisis. And what I wanted to do is, you shared something last week that was with the reported job losses, the unemployment, and that kind of started our conversation because I really want to get your take on this, where we're at. There's this whole shutdown. Everybody's panicking. We have the highest recorded unemployment, applications in the duration that we're doing. It's just unbelievable. And people are understandably shaken, uncertain what the future is like. What do I do? Companies have been shedding people like within 48 hours. I know people that were immediately laid off. If you're lucky to be furloughed, now you can basically get unemployment. A minute ago, it wasn't the case. How do people, first of all, what do you give me your take on this? And then how do people try to navigate this? What does it look like after we come out of this?
Well, thank you for letting me be here. And of course, this is our first global pandemic virus in this modern age where we've done shutdown protocols. And I think that's the new thing for all of us. We are purposefully sending our economy into a recession to fight this virus. So what I've done with my economic work is I've separated into three different categories. I label the first one BC, before coronavirus. And we take all the economic data BC, and what it shows that, the first 2 months of the year was, beating my forecasts.
Yeah.
Job growth on a 2-month average was 244,000. That was 120 over my highest average. Housing data, even for someone like me who tracks housing data religiously, it was doing much better than I thought. And then, on February 3rd, I wrote this thesis for Housing Wire. I call it the chaos theory, the butterfly effect, how something that happened in China can reach out to the entire world. And we just don't know yet, but, this has the capacity to, but back then I talked about, stocks could go down and bond yields could go down, which means mortgage rates could go down. But it's gotten to the point to where it's taken everything, and when you look at what has happened before this virus, we had the longest economic expansion ever in history. We had the longest job expansion ever reported in history. We just had over 7 million job openings, but jobless claims had formed a bottom in 2019. They were on a historically low basis. Because we formed a bottom, they have the capacity to rise quickly. But what we're seeing in the data basically trumps anything we've had on a historical basis, because if you look at high risk employment being laid off due to a government shutdown, it's really 46% of all jobs in America can be taken out within weeks. So jobless claims, I think we lost about 8.8 million jobs in the Great Recession. We're working from roughly around 130 million. So far in 3 weeks, this is how scary the velocity is. On March 12th, jobless claims were still positive. They were heading lower. But in 3 weeks, we've got 10 million jobless claims in that amount of time. That trumps everything. And when you look at that chart, that's 4-week moving average. On a historical basis, it has just gone parabolic. And this can continue on and on. And this is one of the reasons why the government has stepped in such a big way, because the negative side is when your company is losing 70 to 90% of its revenue, and it has roughly maybe 15 days of cash on hand, the company is insolvent. So this is one of the reasons why small business lending is basically a grant to keep as many people employed for 4 months, and you don't really have to give it back. And this is just the first phase. I think we're going to do a lot more fiscal and monetary stimulus to come.
Yeah.
And then the second aspect of it is that how do you treat this on the economic side? How do you model a pandemic virus where you're shutting down the economy? And then you believe that once the shutdown is over, things will start the process of getting back. And this is our first time we're going to be able to deal with this on the, I call this phase the AD phase, after the disease. Now that the government has shut down the economy, the after the disease data is going to be the worst we've ever seen because the velocity is so fast. But then at some point in the future, a lot of things have to happen. I call it the AB stage. America's back. And, it's our first time. It's our first time that we're going to deal in recent history that we're going to deal with shutdown protocols. And how does the economy look like after? Because the velocity of the data is so extreme that in any other normal circumstances, this would be beyond even the Great Depression, because these companies are insolvent. There is no money to be given. Now, the Great Depression was different. The duration was longer. There was no social safety nets back then. We didn't provide checks to people. If you actually look at it, you take unemployment benefits, they're going to increase that by 600. You give the checks. People that make $46,000 and less, their incomes shouldn't drop as much as people think because the government is basically handing checks out. So the job is to keep as many company and people as solvent as possible while we defeat this virus. And I think we're at that stage now, but look for more money to be given because this is one of these extreme situations that if you look at it in any other kind of light, we'd be actually much more negative on the economy than we are right now. But right now, everything looks like the second quarter is going to be the worst of it. The third quarter is only going to look better because the second quarter is so bad. In the fourth quarter, you'll see the stabilization. But that is all based on us making unbelievable progress against the virus, giving more money to people and companies. Because when you come out of this and people start walking the earth again, and they start to go to restaurants, they start to go to movies, companies have to hire back people just because they need labor. How fast does that get back to the BC stage? And some companies just aren't going to be around. Some people will have to do a different kind of line of work, but we're at such an extreme level that tracking monthly data is almost irrelevant. You have to track weekly data, but the first thing is you have to get that virus curve, new cases down.
Well, are we set up? Two questions. Are we set up to collect that data in that manner?
So what I did a few weeks ago is before we had 1,000 cases confirmed here, I looked at other countries and what they were doing. And I thought back then, and I've written this in other articles, I'm going to have a bigger article with Housing Wire coming out this week to go into what we need to see before AB is even discussed or when we are in that recovery stage. I needed to see at least 27,000 cases confirmed first, and then lockdown protocols and testing capacity to grow. So when we got to 27,000, I thought by May 18th, our data in terms of new cases should look better because we have lockdown protocols. Now, California and New York are going to be the states to really track because they were the first. I think California.
Say that again. You came in and out.
The California and New York are the first two states people should track because those are the big states that went to lockdown protocols early. They should be the first new case to start coming down. We see this in Italy right now. In Italy, new cases have gone from 25% growth to now just today about 3.5% growth. So why Italy did lockdown protocols? They're testing more. So as bad as the data looks like now, by May 18th, and this was a few weeks ago, I thought we should look better. But the states that did the lockdown protocols last will be the last to have the better data. So Texas, Florida, Georgia, these kind of states will be the last. But California and New York are going to kind of be ground zero on the data. And then I talked about September 1st. And the reason why I say September 1st is we can't allow the hospitals to be overrun. That's always the situation when people say, well, it's a flu. We don't put people in ventilators that fast over a flu. So you have to make sure that the hospitals are working. And if the curve starts to fall, like in New York, we see some of the data, new entries into hospitals are coming down. We have June, July, and August. We have the summer heat months to prepare for fall and winter. So this buys us, the June, July, and August timeframe buys us time to get ready for a fall and winter. And that's why I say September 1st we need to be in a much better spot in everything against this virus. So we don't have the lockdown protocols are taken off in June, people start to go out again. And, then all of a sudden, we're not ready if it picks up back in fall and winter. And then, at some point in the future, we will have a vaccine or something to that degree. But first things first is you got to get that new case curve to start going down. And if Italy can do it, the United States of America can do it.
So just to follow up on your point, and then I'll go to my second question that I was going to ask. Given the fact that you're tracking California and New York because they were the first to do that overall shutdown, and so we're tracking their progress and their effectiveness and using that as a benchmark. What about if you now look at it from a global perspective? The countries that were hit first, like China, is that going to provide them with a competitive advantage relevant to assistance, reach out? Is it putting them in a different position than they were in because now they are privy to the information, the data of how to combat this, where we
all
are
those not? All those countries that were front in line doing quarantines first and testing, China, I don't believe the data. There are 83,000 for cases
that's probably underreported
for a country of 1.3 billion.
Yeah.
And then all of a sudden it just stopped. So but South Korea and their testing, and the big thing is we have to do it. We have to get ready for a test and trace model. I think South Korea, what they do is they call people twice a day to make sure they're okay. And if they get, so I think you want to get that front line curve down, but you need to have like a test and trace. So we're better prepared. And that's why I think June, July, and August, as summer heat picks up, I know some people might not believe that heat has a factor here. It gives us some time to implement a test and trace policy. So when fall and winter comes in, but those countries that did it first, obviously are ahead than everyone else. So and we'll get to that point. I'm very confident of that. It's just that right now we see these numbers and it's over 300,000. And it just looks horrible. But this has to happen. Testing has to occur. Right. Lockdowns have to occur to get ahead of this. And now I think 87% of the country are in lockdown, stay-at-home protocol. So you give this time, it should work itself out.
So what's interesting. I will say this, and it was a pleasant fact to watch, to see. As much as this is really like extreme and severe and unbelievable, and you can argue whether we are taking more than necessary measures to combat this, what have you. The thing that's been fascinating to watch, and if it's anything, it gives you hope, is how fast. Yes, the unemployment rates have gone up, how fast we mobilized. Now, I'm not talking about a governmental level, right? And that is going to come back and become a part of that conversation, that bigger conversation of, the role of government, the role of local. But, the mobilization that happened in big part because of technology availability, the ability to pivot to where people are working out of homes, like as much as jobs that were lost, the fact that there was no limitations to physicality that were necessary to keep some people working, and how fast that happened is blowing. And you're talking about a global epidemic that basically we're looking at possibly September. I mean, yes, it's a many months, but it's still less than a year that we basically go from a global catastrophe or crisis to where we are now, at least getting a handle of it. How do we deal with this when next time it happens? Do we react to it the same way? Because we're going to have another
Well,
flu season. We're going to have another.
We need, well, this is going to be the case. We're going to have a global pandemic institution that every country works 24/7 on, and you follow playbook models that what we do here. So it's very crucial that we document all this, because this took the entire world. So the next time it happens, we'll be better prepared. Because not every single virus is going to infect the entire world. We have to have better protocols to know when do we need to lock down the economy, when do we need to shut down travel, when do we need, and to prevent this escalation from happening. And sometimes it doesn't even matter. You can do everything perfectly and escalation will happen. But even with the economy, it took a few weeks to get this process started, but we should have programs in place where it gets implemented right away. So the money gets to people faster, the money gets to businesses faster. And I think these are good things for the future, is now that you've seen the damage this can do. There's no more budget cutting for the pandemic virus department. There's no more, we don't need to give resources to this. The economic financial damage that a global pandemic virus could do trumps everything else. So look for more government spending, more government cooperation, and almost a universal front institution to try to get ahead of any kind of virus. And so luckily, as a world, this isn't that Generation X disease that people have talked about where there is no cure. Millions of people are going to be dying on a weekly basis. This wasn't it. But, we will be prepared better in the future against these kind of global pandemics out there, because we might have to do another government shutdown of the economy, and we'll be better suited for that in the future. So we have to learn from our experiences here and never make the mistake again not to underfund or not to underprepare for an event like this for all countries around the world. Because once it gets out, you could just look jobless claims. We went from without the virus, we'd be still having the longest economic expansion ever. But just like this, within weeks, I think the first case was January 20th here in America. From January 20th to I think February 19th stock market was at all-time high, and in a matter of weeks, the entire system just had to be taken offline, because that's how fast the virus pandemic can.
People, it's probably hard to see, and I'll post the graph anyway that you have, but you can see the vertical line. It's just like straight up.
Yeah, and that chart goes back to 1965, and you could see the shaded gray area. That was the Great Recession. The Great Recession was supposed to be a one-time event. This virus dwarfs that. When you have 46% of jobs at risk of being laid off quickly, not like monthly.
Yeah, there's no buildup. There's no gradual.
Yeah, there's nothing that we have that preps for this, because this is a doomsday scenario. So now we see visually what can happen with a global pandemic, with government shutdowns and protocols. But these are the things that need to occur to fight a virus. And the one good aspect is that in the future we'll be much better prepared
So if you will, you can look at this as being as drastic as it is. It's almost giving us an opportunity at a lesser devastating situation to prepare. And
yes.
and what you're saying is that the budget cuts and all this stuff that's happening, that should be now completely rethought, and that there shouldn't be any of that.
We should never, ever have budget cuts for any governmental service that the federal government does, ever and ever. This is the minuscule cuts compared to what our budget is insane. We are a $140 trillion GDP financial asset country. No federal government or states should ever have their main security and medical things ever cut ever again, because it's so small compared to our GDP that hopefully we understand we're not broke. Okay, we were never broke as a country. We cannot afford to allow the federal government to cut spending ever again. And if this doesn't show you why it's so important, then nothing will. Because look at the damage that happened in days. We're not talking about months. We're talking that this thing happened so fast that the monthly data, I mean, that's one of the reasons why I have to do the BCAD, maybe the monthly data lags. I mean, even the last job report, it was 17,000 jobs lost. The next jobs report could show 15 million. Mm-hmm. So the days of cutting government spending or saying that it's a waste, it's a no, the economy would collapse.
So Logan, what do you say? I mean, I hear you completely, and I agree. But what do you say to people that have been basically made a political life or a life ideology of smaller government, less spending, prioritize at the very least, the priority where we spend our money? This should tell us basically needs to be focused on things like this. Like I agree with you 100%, but what do you say to people that say, small government, it's all state decisions and what of that? What do you say to them?
That era hopefully is over. I mean, a lot of my work has been trying to fight that because you have to convince people that people were convinced for many decades that federal deficits were a bad thing, that the Chinese own us, that mortgage rates or interest rates or inflation would have to take off. I mean, I'm dead honest. You were duped. You were duped. Your politicians duped you because they know it's a political narrative, right?
Yeah.
Small government, less spending, and that was, and they were right, because as long as they can lie and get away with it, why wouldn't they? Right? Why wouldn't any politician do that? If people believe that the end of America was going to come because we spend too much on pandemic virus institutions, keep on doing it. But look how fast things have changed. And we can't forget this going out in the future, because this can't be a Republican, Democratic, libertarian. You can't mess with this stuff. There are certain things that have to be funded always, and think about it. All this government debt that we've had for many decades, we've never raised taxes on people.
Right.
The states have to raise taxes because the states have government balanced budget systems. That should be abolished, in the sense that the federal government and states should have some kind of cooperation with each other to make sure that certain things cannot be not funded anymore. Think about if you were a conservative that says we shouldn't do this, we shouldn't spend because we were broke at 4 trillion, 8 trillion, 12 trillion, 20 trillion, 25 trillion. What would it have been? It would have been a catastrophe. So, but people have to understand that the reasons why that was told was they scared you into thinking that rates were going to go, the dollar was going to collapse, inflation was, and that was supposed to be the end of America because our currency would be worthless. The dollar is too strong. There's not enough dollars out there in the world because a lot of the debt around the world is dollar denominated. Our dollar is still way too strong, even with $25 trillion in debt. The bond market is screaming at the US government to spend more money. So that has to end. That entire mindset that has infected us as a country, really for many decades, we have to abandon that, not as political parties, but as a country, as a people. And realize that there's certain things that just should not ever be touched. There's always going to be the left and the right are always going to fight each other on what they should spend or what they should do. But there should be an understanding that the safety of our country, of the world, needs to always be funded. And whenever a crisis happens, we didn't argue about this. We didn't say, how are we going to pay for $6 trillion, 4 trillion monetary, and where's the dollar collapse, right? Where is the 10-year yield at 20 or 30% like people have warned about? They lied. They lied for a reason because they understand they can dupe people. And all these conferences I go at, people go, well, we're going to be broke. Show it to me. Show me when China files for bankruptcy, when Germany files for bankruptcy, UK, Japan, when their 10-year yield is at 100%, and then let's talk about America. But none of that is happening.
What's funny also too is if you look at it in terms of return on investment and in terms of just cost, if the cutting of those budgets for things that are critical, that we are now basically dealing with the lack of that funding or the cuts that happen, the amount of money that would have been spent to shore those up versus what is now being spent in order to basically triage the situation would have been a lot less. Yeah. Additionally, all the people that basically were saying, no, small government, can't spend it on this, never mind the fact that it was being spent on other things that were being prioritized. So there was a duality and sort of a irony in that conversation. However, those people in this situation all of a sudden are okay with spending the money more than we would have basically put
because it was a political narrative lie. I mean, that's just what I've always said the same thing about politics. I hate politics. I try to stay away from political economic theory, but politics is the word itself. Poly-ticks, many blood-sucking parasites. So it's just it's right there in front of us, and we can't just all of a sudden let this go. We have to realize that there are certain things that the public and private sector can work together. And it's not socialism, it's not communism, it's capitalism. It's just why the United States of America has been the most outperforming economy, maybe in history, is that it's always actually had a public and private relationship. It's always had that. We have had deficits for decades, and all we've seen is rates go lower, inflation go lower, and so hopefully this ends. And one positive note is I'm finally, for the first time in the last few weeks, few of my conservative friends are finally saying, you know what, you were right. Gold isn't going to 20,000. Inflation isn't happening. Yeah. These are deflationary events because why? We can do this, right? Inflation, when you're borrowing so much money and it creates inflation, that's when it becomes a problem. That's when you actually have to raise taxes to stop an overheating economy or something of that nature, or the dollar. That's not us. We are the reserve currency of the world for a reason. I always say, look at Japan. Japan's debt to GDP is 250%, and they're borrowing at negative rates than us. So it's different that there's certain things that we hopefully in the future we never ever cut again, because we need to be fully prepared for everything, and not just the virus. There's a lot of other things that we shouldn't try to make political, or we're just going to cut 1% here and say, no, you're going to have deficits forever. Yeah. That's the reality, and people just got duped. That's the thing,
right? And spending on those programs and that sort of greater safety net component, that doesn't make us a socialist country either. I mean, I think thank you for bringing that point up. I mean, it's talking points that are thrown around that cause all this kind of chaotic conversation.
I tell people the conversations that start off with socialism and capitalism, or Trump or Obama or Bernie said whatever, I just run away. Yeah. I run away. I've even blocked those words on my Facebook, Twitter. Those take you into a very anti-intellectual discussion about things that political narrative people want to impose on you for votes. Right. And again, it's a fraudulent thesis, because I wrote an article last year saying we're going to have $71 trillion in debt by 2060. Just everything as is. Just everything. No tax cuts. No new spending. 71 trillion, and the bond market is still low. The bond market knows it's coming. Until the bond market inflation picks up, you have the ability to spend, and this has been going on since 1981. Rates and inflation really historically are low. War has created inflation. World War I, World War II creates inflation. The growth that we saw in the 70s with the baby boomers coming online for the first time, and oil prices, that creates inflation. But debt, federal debt increasing with the US dollar, It was never a valid thesis. And now we see it. Now finally some of my conservative friends are, you're right. The 10-year yield is at 0.62%. We are in a deflationary stage. So hopefully that's the one thing I hope we learn from this experience, that certain things that cost very little compared to the total budget should not ever be cut, because we never know what the next crisis will come. So we need to prepare for everything.
And it may be a heck of a lot more costly than what we just basically cut. And then
Yeah.
that's the lesson. Yeah. So I want to just shift gears for a minute, Logan, because you're also very much a housing guy. And we are very much, especially in Southern California, still very much a kind of a housing and development and construction kind of economy. As far as economic engine, that's pretty critical. So what do you think the impact let's say between now and September? I mean, obviously there's going to be some federal stimulants, federal safety nets. There's going to be some forgiving or postponement of things. It's already taking place in like the eviction component, the rent, all this stuff. And people are it's funny because we're all of a sudden reacting to things like we're all in it together. I hear of the odd conditions where somebody's trying to still behave in a BC world when we're not in a BC world anymore. But in all, it seems to be everybody's kind of like getting it and working towards that after coronavirus situation. But what happens to the housing industry as a whole? What happens?
So I've written about this for Housing Wire specifically. I've gotten interviews from all financial media. What do I think is going to happen? And the first thing I tell everybody is put a huge asterisk on the next 3 housing reports, existing home sales or Southern California sales, because what's going to happen is that what do we see right now? All economic data is getting crashed.
Yeah.
Why? Because people are not going out and going to restaurants or traveling. So what do you need for housing? You need people to go to open houses. You need people to have open houses where people can facilitate a transaction. So lockdown happened here in California on the 20th. Purchase application data on a year-over-year basis was growing at double digits at cycle highs. We had a 13-year existing home sale high in the last report. So housing was the most outperforming industry in our economy. And then the lockdowns happened. So we went from double-digit year-over-year growth. The last 2 weeks, we were negative 11% and negative 11 or 24%. So the 2-week average is about down 17.5%. I believe purchase application data will go down to 54% and more, just because people aren't going to go buy homes. No matter how strong the housing market is. So you have to be careful not to think, because you have these doom and gloom YouTube sites that are just terrible. And a lot of these are real estate investors trying to hawk money for their podcasts or stuff like that. You're going to see a group of people take their listings off. You're going to see inventory rise just because the duration of sales are going to take longer. And so the next 90 days, put an asterisk on existing home sales. Wait 30 days after lockdown protocols are taken off before you make any kind of assumption. Because what usually hurts housing is higher mortgage rates. I've always said when the 10-year yield gets to 2.62% or mortgage rates get above over 4.5%, we've seen this twice in this cycle. Housing gets a little bit softer, especially in Southern California. It's happened twice now, but mortgage rates are really low. But if you do not have a functioning system where people go out and buy homes, then the data is just going to look at just as bad. It's just housing is lagging right now. Open Table, for example, I use this example. Open Table is down 100% year over year in some of their reservations. It is very hard to have down 100%, but it's a shutdown. We're telling people to stay at home. So the data is going to look really bad, but it doesn't reflect to what the housing economy is. Because why is housing so good? Housing has the best demographic patch ever recorded in U.S. history. Ages 26 to 32 are the biggest in America. Your first-time home buyer median age is 33. A lot of people that have been laid off right away are low-wage workers. So the renter side of the housing economy is going to get hit first. Okay, then you have to timeline, when do we lockdown protocols come off? When do all these people rehire? And then the second thing is that credit is tightening right now. So non-QM lenders or loans that aren't backed by the government, most of those lenders are gone, out of business. That happened within days. FHA lending is tightening up. Jumbo market for Southern California, which is one of the bigger marketplaces in America, that is tightening up. Those things might take a little bit longer to get back. So the credit tightening up, the lack that people aren't going to go homes are going to be two things that are going to be with us for the next few months. But after that, unlike 2008, where we had a credit bubble, home sales are nowhere near where we were during the housing bubbles. The credit quality of homeowners in this cycle, especially those who bought homes from 2010 to 2017, best we've ever seen. So it isn't going to be, we're going to have a massive wave of foreclosures because the government itself is going to try to delay that as well. So it's a much different cycle in that regard. And we're going to have to see, how do you look at the housing market when you have the government's trying to prevent foreclosures, when you had the strongest housing cycle demand going into this, most of those people are going to come back and mortgage rates are still going to be low. So we won't know the full damage, but I suspect housing is just going to look like car sales. It's going to look like manufacturing data. It's going to look like the demand is just going to be put in a coma, and then we're going to get back out to life. So
the other thing too, you mentioned the car sales situation. I mean, what I'm also noticing, and especially if we go through this thing for, like, say, a 90-day period, the way that industries are operating, the way that the purchasing and the pitch and all of that, and right now we're kind of in a shock situation. People are kind of, the first few weeks, like, don't even talk to me about buying anything. It's like, I'm counting everything, putting it underneath my mattress, mentally or physically. But I think what I'm also noticing is that this could really have a major impact, not necessarily negative, but a major impact in how the evolution of the industry and how it communicates with its clients, how purchases are made, that all changes. Like, all of a sudden, the car industry, every ad that I'm seeing now is, of course, 84 months or God knows how much, like the extension of the leases, or the payment plans. However, everybody now is like, buy it online, we deliver to your door. Whereas less than 2 weeks ago, there was maybe 3 companies that were basically buy it online and deliver to your door. So there are things that are happening that are, I think, also, again, because how quickly we pivoted. Like, look at the Zoom situation, for example, right? I mean, Zoom now is almost like buying coffee. Like it went from a feature to an actual something that has a direct benefit to how you basically conduct your life on a daily basis.
Yeah, so, and I think you're going to see that in businesses. Do you really need to travel as much?
Yeah, it's going to affect the hospitality industry, the travel.
Do you really need to do a lot of in-person meetings? So we'll see. I mean, my life before this virus was DoorDash, Grubhub, Costco delivery. The only time
you were social distancing before it was.
Yeah, I mean, the only time I really went out was just to go to the gym.
Right.
So I'm basically doing, like, outside of, I'm working out at home now, but I mean that was my life before this. So I literally, and nothing has changed for me. I think that will be maybe an emphasis for some people that, they don't need to, they could get stuff delivered. Like, I was telling people didn't even know Costco delivered. I was just like, I haven't gone to Costco since they started delivery. I'm not going in there, wait in line. I just get the stuff delivered to me. So,
well, all the people that basically, like, I'm working at home, I'm remote working. I'm like, guys, I totally get it. I remember what it was like when I switched that, but that was 20 years ago. I've been remote working for 20 years, right? I mean, the people that work with me and for me, they work remotely. I don't care if they're doing it in their bathroom or not. We have deliverables, we have client obligations, we just meet them, right? There's a sort of a quality of life and sort of independent fabricate or matrixing of quality of life that you can do in a situation like that. And I think a lot of people, if they go back into a space, may actually now be negotiating different terms. It may be 3 days in, 2 days out.
The telecommuting workforce has tripled. I think it was like 1.1%. Now it's 3.7% of the.
And it's only going to go up.
Yeah, and I think there's something that 10 years from now, the after the AD factor of long-term impacts of people working at home. Now, there's certain industries that cannot work at home.
Right.
There's certain jobs that need physical labor, and those are the jobs that are getting hit the hardest right away.
Right.
So there are some aspects that it's just not going to happen. But the interesting is do we start a new paradigm of trying to make working from home or doing Zoom or stuff like that more and more a global event? And what does it mean to the car industry if you don't need to travel as much? What does it mean to the airline industry if you don't need
The hotel industry,
stuff like that is
car rental,
going out in the future. What happens if that's the case? Now, again, a lot of our jobs still are going to restaurants, going on trips, going to hotels, and stuff that you have to physically do. But the paradigm shift was already happening at the start of the century.
Yeah.
Before this, you saw department store sales start to fall from 2000 all the way here. You saw online sales. I know my life in general, I don't really need to, I think one thing the future might have is we might not have movie theaters.
Mm-hmm.
We might have.
We were almost there, Logan.
There's been discussions that you pay $30 to watch your movie at home. If you don't now certain people people are more happy to be around people than I am. So there are going to be people that are going to go to the Spectrum every weekend. They're going to go to bars, and that I don't think that aspect is going to change. But I think certain people are going to maybe reduce their ability to go out to do certain things when they know they can facilitate some of those transactions at home. I think over a 10-year period, we'll see, because a lot of times we make these things, well, this is going to change, and it doesn't really change too much. And I think so many people are cooped in, they can't wait to get out again.
Right. There's a social aspect to the human condition. Yeah.
I always say, don't use me as an example. I'm the worst person to use as this. So generally people like to go out and do things. So I need at least 10 years of data to kind of see how drastic any of these discussions are. Because, we've always said in the past, people, after the housing crash, nobody's going to buy homes, everybody's going to be renters. It wasn't really the case. When the economy started to pick up and demographics picked up, millennials are at a 20-year high of buying homes. U.S. millennials are the biggest home buyers in the world right now. So kind of they're all rented. No, that never happened. So it'll be interesting to see in 10 years what the aftermath of this event is.
Well, it's funny because I was having a conversation with somebody regarding the food and beverage industry, and I said, it's kind of interesting. I've seen it in hospitality in certain sectors like spas, nail salons, grooming, any of that stuff. And I think that we could be looking at that same formula kind of repeating itself in certain industries that have a physicality requirement. Like you could literally have, and there's a lot of open commercial space right now. If you have a commercial space that's large, that was once a large restaurant, that has a centralized kitchen, that has a capacity of certain kind, you may find yourself very easily taking those commercial real estates and actually turn them into almost like a short-term lease catering, food prep, pre-prepared meal order kind of place, all working off a centralized kitchen. And now all of a sudden you've got like a Sola Salon or a Phoenix Salon equivalent for a food and beverage outlet, right? So with multiple offerings of it's almost like a food court, like a modern version of a food court, except everything is delivery or pick up at the curb. So there could be an interesting thing that happens out of this.
We've already seen that in warehouse jobs, yes. as department store jobs, like, the J.C. Penney's, stuff like that. If that's going down, Amazon was the fastest company ever in U.S. history to get to 300,000 jobs. And that was mostly because of warehouse, and then, as you can see, the job openings, Instacart, DoorDash, people are looking to deliver. For me, it'll be interesting to see what colleges do in the future. Are online courses, and opening that up to the public, is that going to be a factor into making college more accessible to people that live so far away? Is the whole paradigm shift of education going to change after high school, just because of this event, where you could actually take courses online on a more common, and have the federal government fund some of these operations, to facilitate more education, more training. Obviously some jobs, some industries, you have to be hands-on.
You know what, Logan, it's interesting. There's two things about that. There's one ironic thing that I found out when I interviewed a gentleman who owns a charter school down here in South Orange County. At the beginning of the year, as part of the set of regulations and laws that were signed last fall, one of the things was there was going to be a 2-year moratorium on distance learning. That went into effect January 1st of this year. There was a moratorium in the state of California on distance learning, driven by special interests or whatever it is, right? The irony is, within less than 2 months, every school in the state of California is distance learning, right?
Life comes at you fast, yeah.
Right, and life happens when you make plans, right? So I mean, it's like that I found hilariously fascinating and interesting. The other thing that I find interesting on another side is, prior to this, there was a lot of universities, a lot of colleges that were offering like certificate programs in developmental sort of certification-ish things, and these are named universities. They were doing it online. And you could do that distance situation. In some cases, you had maybe like a week or 10 days that you were on campus or whatever. It was a combination of hybrid. What I find fascinating right now is that I have not seen really an uptick in that kind of stuff, because people are sitting at home. And if you are looking at basically being potentially laid off or trying to increase your chances of being retained, I would think that this is a prime opportunity for exactly what you're talking about, that distance learning, where people are now being able to do that to shore themselves up. I know a few people that are like getting additional loan, for example, certifications in different states, expanding their capability to do stuff. But I have not seen that really jump up. Again, it's only been a few weeks, right? So my expectations is why isn't it happening already? It's been 48 hours, right? It's fascinating. We have this like immediacy now that our expectations are.
None of us thought that toilet hoarding would be the story for 2020.
Or that Costco that takes back everything will not take back toilet paper.
I mean, it's just, the dynamics of what with global pandemic and how humans react to. Because what I remember the most is going to Albertsons, and I had to get my tortoise baby carrots. And I was sitting in line with just baby carrots, and I was surrounded by people that looked like they were buying for a hurricane or a snow day was about to happen. And that's, humans' reactions are different, of course, in any kind of situation, but to see it live, because again, this is our first global pandemic virus that the government's.
Yeah, we're not reading about this. We're experiencing it.
Yeah, we get to experience. So seeing people, the Zoom aspect, 20 years ago, this never would have been the case, but technology advances, productivity, there's things that can be done now that could have been done, during the Spanish flu. There's realize that we're probably better suited to deal with these kind of situations. Of course, some people say, well, we're a global economy, so the spread could be, but I mean, we have the capacity to deal with these situations in a more efficient way. We just have to be able to make sure these things are funded and there's enough people there to prevent these events from escalating. And again, there's hopefully this never is the case. There's going to be a disease out there that is not going to be cured. That's going to have a very high kill rate. And that, fortunately for us, that isn't this. But we have to always be mindful that that's the most important thing. It's the economy is, it's like if a Tyrannosaurus Rex saw the meteor come down, and his first reaction is, oh no, the economy. You're all about to be extinct. Forget about the economy at this point. We have to make sure that the safety and the lives of everyone is the upfront most important thing. That we need to make sure we have enough people, enough equipment, enough money to fund this, because look what happens. The longest economic expansion in history, hours. Lockdown protocols, it's quick.
Gone, right.
Gone. So $6 trillion, if we would have said, in 2019, we need to do $6 trillion to stimulate the economy or get ready for disaster. Everyone's like, no, we're broke or everything. Look how quick things can change.
And how much lack of pushback on that really is happening, at least right now. There may have been a little bit of pushback about
that's the thing I hope we learn, that, every recession from now on should be treated in this manner, that we can do things right away, right? We can do things right away. We could send people money right away. We could be more efficient in dealing with recession. But there's things that even during an expansion, and so much of all of it is this fear of federal debt. So much of our limitations was this fear that the dollar was going to collapse. That has to end. There's nothing here that's I mean, I need to see other countries have their currencies just, their debt has to collapse, their bond yields have to go up, inflation has to take off. That fear has been great for politics, but it's not been the reality. And I think hopefully if we can learn that, we will be more efficient as an economy, and certain things that, I'm expecting once we handle the disease and people are out there working, I'm expecting a $1 to $2 trillion infrastructure package to actually come, because look what happens. We can do these things. We're limiting ourselves, and this will be a public-private cooperation of both these things, like the U.S. has always been. The U.S. has always had a big government and big private sector working together to facilitate this economy. So the one good thing I hope this horrific event had done is to show us that, God, we've limited ourselves for so many years. We don't need to limit ourselves. And we need to look at that on a day-to-day basis. What can we do to make everyone's life better, and not make this into a political economic fight all the time.
Thank you, my friend, very much. I think we will leave it at that note. I appreciate your time. I know you're very much in demand. So thank you for spending some time with me. And it's always good to see you. Be safe. And hopefully you'll get back to the gym sooner rather than later.
Yeah, well, I'm starting to believe I can do everything at home now. So
thanks, Logan. I appreciate it.
You too. Take care.